Hi everybody, Scott Miller with River City Mortgage and Financial. Welcome to this week's market update. It is for the week of June 15, 2009. This is not a solicitation for interest rate locks. It's not an interest rate lock quote. It's not an interest rate lock and agreement. This is simple information provided to you, our real estate professionals, our trusted financial advisors, and of course our consumers, so they can have a better idea of what's going on economically and make a better judgment on whether or not they should lock or float their interest rate. If you receive this from your realtor or financial advisor, please make sure and thank them by referring your friends and family and work associates to them. Again, Scott Miller. I can be reached at 763-509-7400. My email is smiller@rcmortgage.com. All right, what is going on this week? A lot is going on. Again, this continues. We're in a very unique, very new economic world right now, and a lot of things are happening. This presentation is being done at about 4 o'clock in the afternoon, so we've had time to realize that the Dow closed down almost 200 points today, and oil dropped. Typically very good things for the bond market, so you would see the rates improve slightly or just be a little bit better, be preparing to get better tomorrow. The negative right now that's going on is that half of the stimulus package of the 1.25 trillion stimulus package, or $550 billion of that, the Fed has invested into buying our mortgage-backed securities, and that's what's keeping the interest rates low. There's two things that are making people very nervous on that. Number one, when are they going to run out of money and stop buying our own mortgage-backed securities? And number two, what is their exit strategy to get rid of these? And that's a work in progress. So there's a lot of nervousness on that. Once that either the exit strategy is finally defined, and once it's implemented, there's going to be some major market movement. What does that mean? We don't know. Nobody knows. So they could go up or down or stay the same. That's all that rates can do. However, that goes into what we said earlier. Should you lock or float? Right now, closing in the next 2 weeks, lock it in, be done. If you're closing in 30 days, make a one-day decision. Decide float or lock one day. Look at pricing right away in the morning. If it's something you like or the market seems a little bit off, jump on it. There is risk associated with that, as we're getting some economic data this week. But that's what I would say is don't float for a long period of time. If you're looking 30 or more days out, what should you do? Decide on your gamble and on your risk level. If you can't take the risk, then don't lock in. Be good. Feel that you're going to be stuck with an interest rate below 6%. I don't know how that's bad for those of you that remember the early 80s. Unfortunately, I do. But you remember that time. This is a great interest rate, historically very low, so take advantage of that. Please make sure to contact me. I want to be your lender. I want to work with your clients, and we want to help people make educated decisions so they make the right decision financially. Thanks very much. Make it a great week.